for the first time in 45 years, the US Treasuries now have a higher downside volatility than gold. And when you think about tier one, when you think about the fact that the central banks have been using the Western suppression of the gold market to accumulate gold, when you think about interest rates still rising, the moral of the story is that we now have an environment where treasuries are considered more volatile than gold. And these central banks are shedding US Treasuries in favor of gold, which is now tier one, just like US Treasuries are.
US Treasuries play a vital role in the global financial systems. Both institutional and retail investors consider the US Treasury market as the safest and most liquid in the world. And Treasury yields act as the risk-free rate against which all other assets are measured. However, Treasuries have been at the center of some pretty big financial events in recent years that have brought increased volatility to a typical risk-free market. There was the March 2020 sell-off, when financial markets experienced stress from the onset of the pandemic, and Treasury prices, which typically increase during such times, dropped precipitously. The Treasury market was again at the center of a big financial event earlier this year with the collapse of Silicon Valley Bank and the subsequent crisis that swept through the U.S. banking industry. Through both events, the Federal Reserve had to step in to support the market, and now there's a lot of concern over who will buy all these bonds as the U.S. Treasury ramps up its borrowing. In his latest interview with Liberty and Finance, Franklin President Andy Schectman discusses the increasing volatility in U.S. Treasuries and how they compare with precious metals like gold and silver. According to the renowned analyst and bullion dealer, gold is now a tier one and on the same level as U.S. dollars and Treasuries. Andy says we are witnessing a poignant moment, a dynamic shift that could permanently change how investors around the world think about gold. As the chaos and uncertainties in the Treasury market increases, Andy says we could gradually see money managers and other investors incorporate more gold in their 60-40 portfolios. While speaking about silver, the Franklin president mentions a recent report from the Geological Division of the U.S. government, which is predicting that by 2028, the Earth will have completely run out of economically mineable silver reserves. Andy also talks about the gradual, deliberate, and consolidated shift toward digital tokens by the global banking system. We will now bring you clips from the interview. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on the notifications bell, and drop your comments and observations in the comments section below. Thanks, and enjoy the video.
You know, the one thing that I've talked about maybe that started this entire journey with you, as I used to call it, a linear progression of events, is the tier one revision of gold. And in April of 2019, gold was revised as tier one. Now, prior to that, since the end of World War II, it was US dollars and US Treasuries that were tier one. So keep that in mind. As we mentioned, you have all the BRICS countries shedding treasuries in favor of gold. And this is really crucial, what I'm about to say, and that is that for the first time in 45 years, the U.S. Treasuries now have a higher downside volatility. This is a dynamic move where capital is moving away from, fixed income holdings. And I think what you're seeing is a whole new shift. And what's that going to do to the 60-40 portfolio model? Does that mean we're going to start to see gold replace the 40% in U.S. Treasuries at some point? I'm not quite sure, but certainly I thought that caught my eye quite a bit when we saw how many countries were shedding their U.S. Treasuries, and the fact that for the first time in 45 years, Treasuries have more downside volatility than gold. That's crazy to me. We have another situation, I think, where you talk about, what's happening with the BRICS nations. And more than anything, I think it's a situation where things are speeding up in terms of the countries that are expressing interest in joining. Another 27 have formally expressed interest in joining. And these are all the countries that are rich in natural resources and are doing this not out of economic gain, but out of necessity, I think, where they're finding safety in numbers. So I just found it interesting to talk about that. While we're talking about the bond market, and please feel free to stop me at any time, look, bonds are getting killed. You could say it's a bloodbath. And I argue it's just getting started. The 10-year Treasury yield at 4.5%. It's the highest since 2007. So rates are really, really rising fast. They continue to rise in a methodical fashion, putting greater and greater and greater and greater strain on the system, in particular the banks, which leads me to the first bank I'd like to talk about today, and that is Citibank. I don't know how many people know this, but Citibank just launched a new digital token service using blockchain to offer digital asset solutions for its institutional clients. And the new service is called Citi Token Services. They're converting clients' deposits into digital tokens that can be used for instant cross-border payments. And it's interesting, if you read the article, they mention well-established regulatory frameworks over and over and over again. Makes you wonder, this fine line between conspiracy and reality. Did they allow the Wild West? Did they know that you would have companies, what was the name of the company? Sam Bankman-Fried, what was his company? Whatever the name of it is, the point of it is, did they allow this to happen? Did they allow a situation where they knew there would be fraud, where they knew there would be unregulated misbehaving, and in order to allow the government to step in and say, well, here is our regulated form of this, and this is much better. And the point I'm getting at is that, you have a major bank that is moving one step closer to a central bank digital currency. This is a situation where this is a private managed blockchain by Citibank, but it is the beginning.
Gone were the days when talks of banks enforcing digital tokens on customers were considered conspiracy theories. Now, they are playing out before our very eyes. And this is only the beginning. In Australia, for example, banks are talking about completely foregoing cash transactions for fully digital systems. Earlier this month, Macquarie Bank told its customers it will no longer process checks, accept cash deposits, or permit cash withdrawals from its branches from November 2024. The bank said it is transitioning to completely digital payments. Several large Australian banks have also limited or completely canceled cash transactions in certain banks. No more cash transactions except from ATMs, which are also disappearing at an alarming rate. The global elitist endgame is still clearly in sight. We are going to see more gradual shifts toward digital payment systems until the world is fully digital and one of our worst fears turn into reality. During the interview, Andy also shares an interesting silver fact from the US Geological Survey.
I found an interesting article. We may have talked about it before. It keeps popping up, and it is estimated by a branch of the U.S. government, the Geological Survey Division of the U.S. government, who has come out again and said that they estimate by 2028 the Earth will have completely run out of economically mineable silver reserves. Now, that doesn't mean that they're not going to explore. These are known reserves, and they say by 2028, that's what's going to happen. And that includes Mexico and Peru and the countries that are known for having so much silver. And with the price being so low for so long, the exploration side of mining for silver has really gotten hammered. And so how close are we to that moment? I listened to a very interesting interview the other day about why silver hasn't gone higher. And it kind of resembles what I have said, that the big money is using the suppression of the Western markets in order to accumulate as much as they possibly can. And once they've accumulated it all, and once no one will sell them anything at these absurd prices, you will see the price take off. And the analogy the gentleman made was that when you see new houses being built in an area, your house doesn't go up in value until all of those houses are filled and sold and filled with people. Then your house in that neighborhood goes up as well. And the same thing could be true here, where you talk about the very powerful elite want to sucker as many people as they can into letting go, giving up, capitulating, letting go of their silver at ridiculous prices. And I think that's exactly right. I think that's exactly what they are doing. They are using the suppression of the Western paper markets to accumulate metal. Yet we see China now, the price of gold is about 5% higher in China than it is in the United States on COMEX and the LBMA in London. So you have an arbitrage situation. Is this the opening shot across the bow for where they're playing their gold card now, where the arbitrage, and I'm sure they'll start doing this with silver as well, will just push all of the metal eastward to capitalize on that arbitrage. And that's one of the things we talked about with the Moscow exchange and said this is exactly how they would do it. You want to accumulate all the metal? Then make the price legit, at least much more legit than the COMEX and the LBMA really would let us on to believe is legit. So interesting times, in terms of metal accumulation. Look, you got the Silver Institute saying we're going to have, or last year we had a 240 million ounce shortfall in silver, a 51 million ounce shortfall in silver in terms of supply versus demand in 2021. What does this year look like? How many years can you continually run a deficit in mineable supply versus demand in an asset that is decreasing in nature? And the U.S. government says will all but be gone in 4 years, at least that which is of a known reserve. Yes, you can start exploring, but the time from exploration to production is years. And so is that why they're holding it down, even though we all know that it is such a strategic metal, not just industrial, not just monetary, but strategic? And I read another article last night talking about how much silver is used in nuclear submarines. You're talking thousands of tons. It's not just, or hundreds of tons per nuclear submarine, but when you use the entire naval fleet, tons and tons and tons and tons of silver in missiles and in nuclear submarines, in all forms of advanced military warfare applications. And so you put it all together, it is a strategic metal. So maybe it's someone within the U.S. government or an entity within the U.S. government that is withholding the silver, that is pulling it off the exchanges. Maybe that's part of it too. Maybe that's why, for the last 3 years, the amount of silver eagles that have been made were a fraction of what they have the ability to do. I don't know, but the more you go down these rabbit holes, the closer you see there is a fine line between conspiracy and reality.
Several metals analysts, economists, geopolitical and macro analysts are talking about a shift from the current fiat-based system toward a better sound money system, backed by commodities like gold and silver. With the events of the past 3 years, starting from the incredible money printing, this future has been drawn much closer than we can imagine. Please share your thoughts on Andy's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.